Broadcom shares are moving higher in the after hours after the company announced their Q4 earnings. We'll go over the Q4 numbers, and we also got Q1 guidance from the company. How has the VMware acquisition fared on this company's balance sheet? They took out a lot of debt. They also absorbed a lot of clients and customers, and more importantly, employees from VMware. How have they done some cost cutting and some, quote, synergies over at Broadcom? You'll want to stick around and see that. How is the company's semiconductor business, which gets a lot of the attention over at this company, how has that fared over the past year and really quarter over quarter? We have to talk about that because business looks like it's absolutely booming. We'll take a look at all of the pertinent financials that you have to take a look at with this company. Also, cash flows flowing into Broadcom. And then we'll also look at this one technically because we recommended this stock on our Equity Empire channel about 3 weeks ago, and things are going pretty good. You are making a new higher high on Broadcom, up about 5% in the after hours. We'll see if that holds not only during this video, but into tomorrow. Now, if you've owned Broadcom for any length of time, you've done really well. Year to date, it's up 61%, and it's on its way to a $1 trillion market cap. That's after the company announced their Q4 earnings. Revenue was in line in this quarter, like right at expectations that were set by Wall Street. Expectations for Wall Street was at $14.06 billion, and that's exactly where Broadcom came in. However, they gave us guidance for the first quarter, which came in at $14.6 billion, about $540 million higher than the quarter that they just produced. And Wall Street estimates were right about there, but right at $14.55 billion. There was some rosy expectations, potentially for as high as $15.8 billion. Broadcom certainly probably not even going to hit that, even though this guidance is probably somewhat sandbagged to a certain degree or underneath where Broadcom is fully expecting to come in. Now, you had some other positive news come in the fact that if you hold shares, your quarterly dividend just got a raise. You just got 11.3% raise by Broadcom in the after hours. So pat yourself on the back. Those dividends from Broadcom are going to be cashing in big time. Now, the company had multiple headlines this week as it relates to one of the world's largest companies, and that is Apple, probably one of its largest partners as well. Apple is working with Broadcom to develop in-house AI server chips. We talked about Apple and the fact that they're trying to accelerate their Apple Intelligence, but they don't really want to offload a lot of that information onto other people's servers unless they tell it to you. I think they have an integration with ChatGPT, which obviously takes you probably over to Microsoft servers. Apple's trying to do this all in-house, and so they're working with Broadcom, which is viewed as a leader. They've been working with Google, more notably, on custom AI chips for a really long time. Now, a negative headline as it relates to Apple is they are potentially switching components in the iPhone that relate to both Wi-Fi and Bluetooth away from Broadcom designs to Apple's own proprietary designs. Although we've seen this numerous times with Apple where they say we're about to release this chip, and then they come to the table with Broadcom, or Broadcom comes to the table with them and says, well, maybe you should continue to use our designs. All in all, probably should be a win for Broadcom, as those AI chips probably carry much healthier margins than these Bluetooth and Wi-Fi chips. Speaking of the semiconductor revenue, it was a record $30.1 billion, driven by AI revenue of about $12.2 billion. AI revenue grew 222% year over year, led by their XPUs, which is essentially kind of a GPU, and their Ethernet networking portfolio. And the networking side of this business drove our call to recommend this stock among a couple of others on our 3 stocks. I'll have a link to that in the description below, maybe even the pinned comment as well, if you want to check out that video. I actually don't think it's too late. If you feel like you've missed the boat on Broadcom, I think as we go through these financials, you're going to see this company is probably still going to continue to churn higher. Now, Semiconductor Solutions came in at about $8.2 billion in the most recent quarter. That was up 12% year over year. It's infrastructure software, which it has acquired through a number of different acquisitions, more recently VMware. That was $5.8 billion. That was up 190% year over year, but that is not all organic growth. In fact, the vast majority of this growth is the fact that they bought VMware for tens of billions of dollars. And so that's where this growth is coming from. Also, when you look at this company's revenue estimates. Yes, they, quote, grew revenue by 51% in the most recent quarter. But again, you're lapping a quarter where they did not have VMware revenue. So some of this $14 billion worth of revenue, the company had to recognize this on the balance sheet. You'll see this. We've got a mountain of debt over at Broadcom, and it's costing them a pretty penny every quarter in terms of interest payments. We'll talk about both of those things in a moment. As we move into Q1, Q2, Q3, really into when this company makes another acquisition, this is where you're getting a better view of kind of the non-organic or non-acquisition growth that Broadcom is able to achieve. You're kind of high teens, even upwards of 20% growth rate on this one. And yes, you've got a multiple right at 37 times forward, maybe a little higher, maybe a little lower based on the revenue estimates and profit estimate this company is going to come out with over the next couple of quarters. But it's not wildly overvalued based on the growth rate that you have. Now, the other thing that you have to expect with VMware, it's run by a man named Hock Tan, who has a Wall Street background and also a merger and acquisition background. In fact, there's probably no other CEO I would rather see buy another company and integrate it into their business than Broadcom, because this guy is a ruthless cost cutter. I would not want to work at Broadcom. I would not want to work for Hock Tan, but I would love, and I have invested in Broadcom. That is because he is incredibly ruthless. Now, revenue came in at that $14 billion. They have relatively high gross margins over this company. Research and development ticked up fairly meaningful year over year. But the reason why this company slips in kind of a quarter over quarter view, we've got the August quarter to the November, is they really want you to compare these two numbers because this is showing you the trend. They were at $2.4 billion of R&D spend last quarter. They actually drove that down to $2.23 billion. So they have higher revenue, but they're able to drive down R&D. Now, they're also doing it on the SG&A, the selling general administrative side. Last quarter was $1.1 billion. Hock Tan's going to get this under $1 billion. Probably by Q1 of this upcoming quarter. He's now right at about $1 billion. Now, they still have some restructuring charges that's sitting at about $300 million. You have some amortization charges here as well. That's non-cash. We'll add that back in when we get to cash flows. Now, we still have plenty of interest expense over at this company as well, although they continue to drive this down. It was $1 billion last quarter. Now it's at $916. Again, this is on a quarterly basis. This is pretty expensive. Obviously, interest rates have ticked up. When this company had to borrow this money, they weren't at rock bottom type of rates. Obviously, a company like this benefits a lot in two different scenarios. Number one, you get deregulation, allow more M&A. This company's been able to pull off a lot of M&A. I think they're going to probably do it over the next couple of years under the Trump administration. You get a continuing drop in rates. I don't think they're going to go back down to zero, although maybe now that I say it, they will. But you have still historically low rates. This company should benefit from both of those types of things. Your net income came in at $4.3 billion. It compares extremely favorable to the previous quarter because they had this kind of income tax thing. That is why on a lot of businesses where there's a lot of moving parts, there's an acquisition, there's taxes, there's all this stuff going on, focus on either this line where it's showing you their operating income, including the debt payments. In this case, I would include that, or you can come up here to operating income as well. And you see quarter over quarter, they went from 3.8 billion up to 4.6. It's a very positive trend. When you factor in the interest payments on the debt, it's 2.8 up to close to 3.8. This is the trend that you absolutely want to see over this company. They don't have a mountain of cash. Now, like $9 billion. Yeah, that's a mountain. But we are talking about $1 trillion company. And compared to other big tech giants like Meta and Google and Apple and Microsoft and all those types of companies, even like Tesla these days, $9 billion is somewhat, we'll call it on the light side. And it's balanced off by a lot of debt. Look at this, $37 billion last year. They acquired VMware. It ballooned to 66. So some of you might be wondering, well, how have they paid down? How have they managed that debt over the past year? Well, you've got to come to the statement of cash flows. Now, we pull down a net income number of about $4.3 billion. Again, last quarter, it was negative, but a lot of that has to do with some deferred taxes and some other stuff. Here's where you get a very clean comparison quarter over quarter. You're going to add back in amortization, depreciation, stock-based compensation, all these things that are basically non-cash, and you get the net cash provided by your operating activities at Broadcom in the most recent quarter ballooned to $5.6 billion. Last quarter, it was closer to 5. Now, what's great about this company is they have almost nothing to spend this money on. I say that kind of jokingly, but at least from operating the business. This company is not building a glorious headquarters or trying to build fabricating facilities like Intel. So they only spent $122 million in the most recent quarter on property, plant, and equipment. In fact, if you drive by Broadcom's offices in the great Silicon Valley, you almost miss it because it doesn't look nearly as glorious as other ones. That's also why I love Hock Tan. This guy this guy is cheap as they come. And as a shareholder, you love that. So what are they doing with this $5.6 billion? Well, they gave you a raise on the dividend. This guy is super shareholder friendly. That's why this is a stock you love to hold for the long term. He's going to raise the dividend. He's going to buy back shares to the tune of $1.2 billion in the most recent quarter. He's continuing to pay down debt. They borrowed about $5 billion on some long-term borrowings, but they paid back about 7.5 of it, and they continue to pay dividends to the tune of about $2.5 billion in the most recent quarter. So you're going to get a dividend. You're going to get buybacks. The company's cash flow, their business model, all their business units, they're going to continue to generate positive operating cash flow. They'll service this debt. They'll whittle it down over the next year. And my guess is within the next probably 24, 36 months, they'll look to make another acquisition to continue to grow the company, because that's what they've done for a long period of time over at Broadcom. Now, the long-term chart looks absolutely sensational. That is why I've loved this stock. Look at this long-term chart. I mean, you have been channeling upward since 2010 on this one. My goodness, this is absolutely sensational. Now, more recently, you've been on kind of this breakneck purple trend. Now, I don't blame anybody for looking at Broadcom like it's like at the top of the channel, which is typically when we're kind of hands off on these types of things. It's on this breakneck trend. But as you saw during the stretch from like March of 15 all the way to March of 18, you hovered at the top of the channel. This thing just continued to churn higher. I think potentially you're on that type of move. Now, if we do get a breakdown in the overall stock market, whatever, you get pullbacks. This one gets exciting as you move back to the middle of the channel. Obviously, bottom of the channel will be on this channel and probably newsletters and everywhere, kind of pounding the table on this one. So that was Broadcom. Absolutely sensational numbers, about what you'd expect from revenue, guidance, everything that you would expect. Probably better than expected in terms of controlling costs, driving those down, continuing to drive down that debt, which will drive down that interest expense. That'll continue to turn into net income. And when this company generates more net income, they continue to increase the dividend and do the buyback. This is one of the most shareholder-friendly companies inside of tech. And if Broadcom is not inside of your portfolio, you should probably think about adding it sometime in the future. Hopefully you guys enjoyed today's video. We'll be back again this Friday with the Fang Stock Recap Show. Good luck with your investments.